Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, I don't have the music going. All right, well, let's fix the music first. Apparently, I leave for 1 week and the entire global economy has decided to, like, completely collapse or something like that. I don't know. We're going to have to take a look at... You need to go on vacation more often, says Brad. Apparently. Well, let's go. Wait, let's start the music first. Good grief. 100 Thieves play. Oh, I don't have my voice meter going, so I'm not hearing the music. There we go. How's that sound? Okay, that should be good. Let's go to the charts and see what the damage has been, shall we? Oh my. Wow, that is, what are we at on the yield? Oh, well, I have to switch over because we're on August now. So I don't see what the yields are at the moment, but we will figure that out in a bit. Look at that steepening, man. Whew, I mean, there's still like a long way to go in steepening. Well, honestly, there's a long way to go in like treasuries if we're like actually having like a recession crash sort of a thing. The treasuries could go so much higher. Okay, S&P 500. Ooh, that's pretty ugly. Actually, you know what? That's actually maybe not the end of the world. We'll come back over on the daily basis. Okay, so we're coming back into, like, what, April, March levels? Today, the overnight washout, though, is insane. Wait, so I see some people talking about the VIX here. What are we at? Hold on a second. Trading view. If I want to look at the VIX, I'm going to have to come over here and look at trading view. And do something like charts, VIX, CBOE volatility index. Let's set it to like 1 month. That way we can go all the way back to like 2008 levels. Okay, so we are showing this is a full-blown crisis levels at the moment in VIX. Okay. I'll leave that open. So, coming back over here, how are other assets impacted? Okay, oil is above 70. That's a pretty jarring decline, like $10 though, still, for the past week, basically. Gold, interesting. Gold is getting creamed here. Even as the treasuries are rising, so gold and treasuries are opposite correlated at the moment. Well, that really has me off balance. Okay, silver looks just as bad, although it's, you know, it wasn't down as much in the earlier action. Copper getting hammered pretty hard, and the Japanese yen, mama, that is a big one. Wait, so we gotta zoom out on that too. Let's see here. Which is it? Right here, daily. Oh man. Okay, so we've been watching this this whole time, right? Like, there was some intervention over here, and we're like, you know, this isn't very good, and it was bad. Aren't they going to do anything? Okay, they did something. We're coming back. Okay, it's fine. We are already to, what? February's levels in the Japanese yen in, like, 2 weeks worth of action? That's a little wild. Wow. What about Bitcoin? Ooh, yeah, Bitcoin's getting hammered. That is a pretty look at the gosh. Bitcoin went from hugging the 50 and 100-day moving average to a whole standard deviation below the 200-day moving average. Holy crap. That is wild. That is really wild. Okay, well. Right now, at the moment, Octavia says that he's long, and that sure seems to me to be the play. Would be long treasuries. Okay, so first thing is that the liquidity is really low. So I have had both very good and very bad experiences when the liquidity is that low. So right away, we are in this might be too volatile for me to trade territory. At the very least, we're going to be, bringing our size down, watching it real closely. There's not one large MBO, at least not one that triggers your filters. Yeah, it can move like literally on a few hundred contracts. That's insane. Okay, so let's come in and roll over some of these DOMs here. So oil needs to be on September, so that's you, right? Okay. And then I guess all of these, no, we're in August now, so this should be these should be Qs. And Q. There we go. Q. August. Q is for August. That's good enough for me. Doesn't make the codes make no sense. Casual 225 print overnight session in ES seems normal. Wait, was that what it was? Whoa, let's go back here. Daily. Holy well, I don't have it listed by points. I have it listed by percentage. But that's almost a 5% move overnight. Holy. That's wild. That's wild. Okay, well, I had a story I was reading. Am I allowed to read this? Black Monday. Futures plummet as VIX hit 62. Japan suffers worst point drop in history. Yeah. Okay, wait. Let's come back and do it. No. Kevin says, oh, just do the math. No. I'm going to do it with all of my special fancy nonsense. Multi-ATR. And I'm just going to use points. Like that. There we go. Okay, it was 140 points overnight. 149. Ooh. A little scary. It's a little scary. Like here's the thing. Okay, all of this. Really, like everything since 2022, let's say. So all of this in particular. Wait, where's my pen? Where's my pen? Yeah, it says 140, 150. It's like 150 points. In SPOO. Where is it? Oh, so we're all the way over here. Gosh, the treasuries are really going. I suppose I should make... Okay, Goolsby is speaking. Okay, so I'm hearing Fed's Goolsby speaking and saying that the Fed, if the economy deteriorating, that the Fed will respond. That sounds like a buy to me. I don't know. Oh my gosh. Okay, I'm just realizing now. So now that I've got the yields up, that we're at 3.66. Are you kidding me? Like, we were at 4. That's 40 basis points. Probably more like 60 basis points in the past when you count like the last 2 weeks. Anyways, okay, coming back over here. Okay, from a technical perspective, you know, all of this in particular, and I would even say a good majority of this has been kind of like, I don't know how, you know, I kind of feel like a lot of this is chasing. I don't know how in line with the actual underlying economy this actually is. Chances of there being a pullback and giving some of that back are pretty high, that sort of a thing, right? But the problem is that the things that we're talking about. So I didn't just chill. I tried to play a little bit like I'm super shocked that, well, I am super shocked like the first time I'm coming in and looking at the charts, but I've been paying attention to what's going on, and the stuff that I am reading about is like once in a lifetime stuff. In particular, so here's the thing that really wilds me out. Again, going back to the Japanese yen, where is that? We've been following this all year very, very closely. And I've been saying like, hey, you know, the Japanese yen going so low is not really a good thing. Something's going to have to change, and we need to see the yen stabilize here. Okay. So that has happened. One, I didn't expect it to shoot back up quite so fast. Obviously, there are some people out there that are like insanely short the Japanese yen that are like unwinding it, right? But number two, I didn't expect everybody to be like, oh, the yen carry trade is over. Okay, like this is something that's been going on since before I was born, and has been one of the key correlations drivers in the markets for like 50 years or something like that. And all of a sudden, I'm reading news headlines and news stories suggesting that the yen carry trade could be over for good. Like, what? The change in the market that you can have from that could be tremendous. I have a hard time even picturing what that world looks like. So it's kind of funny. The whole time while I was on vacation, I was writing scripts and stuff like that. And one of the things was I was writing a script that was a bit more about like how to develop trader intuition, because I think that like when you're trying to learn how to trade, a lot of people are like, I don't get, how do you learn? Well, a lot of it is coming in and watching it and developing the intuition. But this is probably a good time for us to take a step back a little bit and be like, let's understand all of the dynamics, absorb a lot of information and so forth, so that we can take the opportunities when they come. I suppose that right now is a place for opportunities. I kind of feel like it's a little bit too volatile, though. Like, yeah, the market rallied on that Goolsby comment, but they're pulling back considerably already. Another thing I kind of wonder is like, okay, so if the Japanese yen is coming back, what does that do for the dollar overall? Like, obviously, I would expect the dollar to decline, but like, how much? How much can the dollar go down? I remember times, well, 100 is kind of like not too far off. We're at 102 right now. I don't think that we're actually at like super low levels for the dollar that are concerning until you get to like 90s. But then, you know, there's going to be other currency changes in other currencies too, like the euro. So is it really going to be that simple? Or does, well, I guess the euro is going up against the dollar as well. Because basically, okay, let's try and step back a little bit. Like, what is going on macro-wise? The carry trade is essentially, you go and you borrow money in yen, and then you sell that yen and buy dollars and use that money to buy like US equities. Essentially, you're borrowing in a currency where the interest rates are super duper cheap, and then you're investing that money somewhere where it will yield more, like US equities. Okay, this is a big trade. All the hedge funds, that's a really large source of a lot of like hedge fund profits, and even like sovereign wealth funds have gotten involved in this. Like even the Japanese central bank themselves have kind of gotten involved in this carry trade, right? So if the carry trade is unwinding, what does that mean? That means that you are selling off your US equities, using that money to buy the yen. Hence the yen is going up and the dollar is going down, right? So how much money leaves the US because of this trade? And then like, where does it go from there? Because like, does it really stay in Japan? Like, you bring it back into the Japanese yen, but then you don't want to keep it there because their stock market is like cratering right now. Yeah, it's exactly what I'm hitting at here, Namrus. If trillions return to Japan, won't their stocks end up bid eventually? I think that's probably not the end of it, right? It probably goes somewhere else from there. So I guess the first thing then, my first conclusion from all of that, just from like looking at the most basic level of understanding the macroeconomic thing that's going on right now, we could see some back and forth in some assets. Like we might see something where like the asset sells off super, super hard, and then the asset turns around and buys super, super hard as the money like sloshes around and tries to find where it wants to actually go. Where it goes after that, I'm not entirely sure. Because I don't think that I want my money in Japan, right? But that's the first thing that I have to do to like unwind my trades. So you take the loss. Once you've taken the loss, you're in Japanese yen. Then what do you do with it? I'm not sure. But maybe as we read around, we can get some answers to that. I'm still hearing comments from Fed Schoolsby, and the market is definitely sloshing around on this. Oh. Bond markets are now pricing in a 60% chance of an emergency interest rate cut within 1 week. This would mark the first emergency interest rate cut since March 2020 during the pandemic. Bond markets are saying that something broke. Okay, so here's the next thing. So part of what sparked this was the Japanese central bank raising interest rates. It was only one interest rate hike, but that was enough to dislodge all of the shorts. Okay, so do you hike and then bring it back down after everybody's stopped out? After all of the hedge funds that have been shorting this, you know, like into the ground are out of that trade? Maybe. But let's just say that their rate stays the same. What do we do over here? Okay, well, US equities are selling off, something is broken, we're having like a global liquidity crisis of some sort. Like I when I see the treasuries like 1,000, below 1,000 per level, I'm concerned. Something's wrong, right? Okay, so what do you do in the United States? We cut interest rates to kind of stem the bleeding. Because the problem is that again, it is that go and borrow money in the cheap currency and then go and buy assets somewhere else, or in the more expensive currency in this case, right? So if we cut interest rates in the United States, it doesn't necessarily fix the issue, especially since, interest rates are lagged, right? They're like 6 months lagged. For instance, we're looking at, hey, maybe we are going to have a recession. Like the economic data that we got last week, and I think that all of the movement that we got last week was really about concerns about growth. We're gonna have a recession, and if we're really like already entering in a recession, then if we cut interest rates at the next meeting in September, then it'll be too late. If we had cut interest rates at the meeting that we had last week, it would be too late, right? But none of that is going to fix this issue at hand with the Japanese yen. So I'm thinking that what I should be on the lookout for is asset purchases, shouldn't it? But how do you do that? You print money and, Obviously, the first step involves printing money, but then what do you buy with that money? Where do you put that money? In the Japanese bond market? Maybe. So could we see a coordinated global effort, central banks around the world buy Japanese bonds? But that would probably exacerbate at least the currency trade even further. Oh man. So then the play really is just buy the yen, isn't it? Let's shelve that one for now and do a little bit of reading now, okay? Well, we'll read as Zero Hedge's headline story, but they had a story about emergency rate cut hope, something about the carry trade. Wow. Stocks halted. So there were halts. Here we go. This is a Zero Hedge premium article. It was posted late last night by Tyler Durden. Your 077 says circuit breaker off again. What hit a circuit breaker? Okay, well, let's read here. Good morning and welcome to a global market meltdown sparked by last week's catastrophic Bank of Japan decision to hike rates by 0.15 base. It was only 0.15? Okay. Which in turn crushed the 20 trillion yen carry trade, sent the yen exploding higher and wiping out trillions in highly levered instruments, leading to a cascade of selling and forced liquidations, which has resulted in a historic market crash in Japan and a rout everywhere else. In the US, futures are sharply lower, with tech plunging as the global AI/semi trade, itself a byproduct of the carry trade, is sold and small caps are reshorted. The Nasdaq 100 is set for its biggest opening drop in more than 4 years as the investors embrace for days of volatility amid rising concerns over a slowing US economy and overheated gains in the tech sector. Nasdaq 100 futures fell as much as 6.5% before paring losses to about 4.5%. That puts the tech-heavy index on its track for its worst open since the pandemic days of March of 2020. The Nasdaq dropped into a correction Friday as investors freaked out over elevated valuations and the high cash outlay for investments in artificial intelligence. Philadelphia Semiconductor Index is already in a bear market, tumbling 22% from the peak even before Monday's open. Meanwhile, S&P 500 futures were down 3%, while those tracking the Dow Jones Industrial Average declined 1.6%. While both NASDAQ and Russell futures have paired their largest overnight losses, brace for more waves of selling as the VIX spikes above 62 and forces margin call after margin call, and volatility sellers are carted out. You know, that one's kind of funny too, because I remember before I was going thinking about, oh, like the VIX is so low. I guess you want to do some sort of a, you know, the black swan sort of a trade. But how long would you have to keep that on before it works out and everything? Well, only a week apparently. While U.S. futures are a bloodbath, nobody had it as bad as Japan, whose benchmark Nikkei 225 index recorded its worst daily ever sell-off on Monday, losing 4,451 points from the previous day's closing, amid panic selling triggered by fears of a possible U.S. recession and the yen's strength. So keep in mind that, you know, their markets were closed and everything, didn't have a whole lot of time to price in the disastrous jobs numbers that we had on Friday. And so they were basically rearing ready to go and sell like right off of the open in Japan because they catch up. And then I guess it just kind of, you know, rolled from there. The sell-off was the largest ever in history and worse than the Black Monday crash of October 1987 when it lost 3,000. Well, okay, but what was it in percentage points? Whatever. The average closed down 12.4%. Holy shit. On a percentage basis, it wasn't that much better. The Nikkei's here, Topix, tumbling 12%, its biggest one-day drop since the 1987 stock crash and the second worst day since data begins in 1949. The index is poised for its biggest three-day drop on record. Turbulence in Japan, where the central bank started to raise interest rates as the Fed looks to cut, and a historic mistake that has already wiped out trillions in value, is also having ripple effects across global markets of various asset classes. This is due to moves to reverse carry trades, in which investors had borrowed at lower interest rates in Japan to fund purchases of higher yielding assets elsewhere, and nowhere has this been felt more than the yen. The USD JPY is down a record 20 big figures from 162 a week ago to 142 this morning, tumbling more than 3% since Friday. The constant selling has pushed the USD JPY RSI to the most oversold level since 1995. With yen carry trades now being unwound quickly, not only has the Japanese currency notably broken its depreciation trend against all major units, but risk assets that those trades were financed with are also being sold off, wrote asymmetric advisor strategist Amir. I'm not even going to attempt that name. In a note to clients. Back to the US, looking at the pre-market, it's a tech rout for understandable reasons. Many of the best performing stocks were direct beneficiaries of the leverage afforded by the carry trade. And sure enough, the magnificent 7 names are crashing. Nvidia down 9.3%, Apple down 8.6%, Tesla down 7.4%, Microsoft down 4.5%, Amazon down 3%, Meta down 6%, Google down 5%, and semis are under pressure. Here are all of the most notable market pre-movers. Nvidia falls 12% as mega cap technology stocks are bearing the brunt of the sell-off as investors brace for days of volatility amid rising concerns over a slowing U.S. economy and overheated gains in the tech sector. Okay. So I'm taking a pause, a breather here for a second. In 2008, when everything was kind of like down in the doldrums and everything, and I first got into investing and so forth, I remember looking at these tech companies like Apple and Google, and I was like, oh, well, you buy these. These are like the biggest things, and like it just seems like a no-brainer. And it was a no-brainer. I mean, the amount of money you make since 2008 in these tech companies is just absolutely obscene. But now, if we are looking at a world where the yen carry trade doesn't exist anymore, and that's a big if, by the way, like I'm hearing that talk all over the place, but this might be like a temporary blip and then go back to the way that they were, right? Japan, reverses the decision tomorrow and everything goes back to the way it was. Maybe. But if it doesn't, and we get like a real total recession, stock market crash, like the S&P 500 declines 50%, something like that, right? What do you buy? When we bottom out, assuming that you knew which day it was going to bottom out, what stocks would you buy? Because in that new world without the yen carry trade, I don't know if you buy tech. I'm kind of sitting here wondering, like, is computer equipment going to get like massively more expensive from here? So I kind of feel like electronics are too cheap. And where would all of the money be going in response? I would like to think that some money would come to the United States, but so that's still the same kind of question about, like, okay, you unwind the carry trade, and then with that money that you have left, where do you put it? Does it matter where that money goes left because there's so little of it left at the end that it doesn't? I don't know. By the way, we are back to the lower end of the range in the treasuries. Oof. Yeah, that is too much for me. In fact, that okay, $20 on this. I don't know. In this kind of situation, I think that I would rather be taking a trade where I'm going long the treasury. So pullback like that is not really very. My trade plan for today is 100% chance the initial balance will break if its sell target half the gap. I think it's going to be volatile. So I was reading a book over the weekend, More Money Than God. And one of the things that I had sent, and I think that I remember somebody bringing this up before on our channel in chat, but they said that their favorite kind of trade was when, they don't expect anything to be going on. The market shouldn't be moving. It's just ranging. And you get this freak move out of nowhere going a certain direction. And he says, because that's like a really good chance that somebody knows something and is moving it. And I've very often, I've gotten these moves and I'm like, well, I don't know what's going on, so I don't think that I'm going to step on board because I don't know how far it's going to go. But I think in these kinds of situations, when you start to see moves like this, we can jump on them. So it's just like, dealing with the risk and everything. So I could potentially jump on board this selling in the treasuries, for instance. Except for that, it's the wrong way. It's the wrong way. Should be like, I want to buy treasuries. I want, if we think that there's going to be like a global financial panic and all that, like treasuries could go so much higher, right? Wouldn't the vast majority of carry trades still be sitting on big profits? Okay, so I think that part of it is like something that's going to cycle. Like, right, you're going to buy Japanese bonds and whatnot. Or actually, you're going to sell Japanese bonds, aren't you? How does that work? But you wouldn't sell Japanese bonds. You would offer your own bonds into the Japanese currency. Sure. Okay. Yes. So you're selling over here, right? And it's going to have like a maturity of 10, 20, 30 years or whatever, right? And then every year, as some of that expires, you're going to re-rotate some of it. And so then that's going to be like some profits, right? So yeah, these guys, like if you're looking at the whole 50-year history of the carry trade, like, yeah, there's going to be big profits. But like what we're more concerned about are going to be like the currently open positions, right? Will those currently open positions have a profit or a loss on these trades overall? I'm not sure if there's any way for me to really know. Because the dynamics of like when they took them and where the money is actually at is too complicated for us to calculate. Maybe we might see some analysts that attempt to predict that. Maybe there are some key levels in the yen that this is gonna like revert to. I don't know. If my plan for the day is to stay on the sidelines, I could take a trade, but I'm going to be very selective about it. I'd be much more likely to take a trade like sitting here waiting for a headline to come across, right? Okay. Surely if there was big panic, RE buying treasuries at the action at the high 15, 20 minutes ago would have been indicative of that. I don't know what you meant by panic RE, what RE stood for, but I think that the strong buying that we were seeing, like the thing that I heard at the top on the news squawk was Goolsby talking about, well, okay, if the market does, if there is a collapse, we will act quickly and intervene and so forth, which is to say, like, the central bankers are like only just now starting to realize, oh, we might have to do something here. They haven't really talked about it yet. So I think the chances of market intervention today, pretty low. Tomorrow we'll see. Because again, the way that this has been working, that's awfully quick, right? Took my dog to the vet to get his stitches removed, and there was no cancer. Well, that's good. Do you remember when I told you we need a good old financial crisis to get rid of the YouTube gurus? I don't remember that. Actually, okay, so would a good old financial crisis get rid of the YouTube? In the financial space, probably. We'll still be around, but probably a lot of, like there's a lot of people, they're like 19-year-old kids. They don't know jack squat. And all of a sudden they're like trading and finance gurus and stuff. Drives me crazy. Because this is something that really takes a long time to really figure out and build a good, sense of intuition for the markets. And you had all these kids that I guess because of, the post 2020, liquidity infusion and the market just going crazy and everything, right? They all wanted to jump on board. They all wanted to become an influencer on something. And so we saw this huge infusion of influencers in the finance space. So you got to keep in mind, when I started doing this in basically 2017, like nobody did it, right? Like I was the only person that was like live streaming. I've been basically live streaming day trading as long as you have been able to live stream day trading, I guess. Anyways, but probably you will see some of these things collapse. Although I kind of feel like that the big bubble that you had in YouTube, which was the whole ICT nonsense, the smart money concepts bubble, that's what I will call it, kind of already popped. I didn't get to accumulate enough TLT to make the greatest of plays on this, but man, that position is doing some heavy lifting right now. I bet. I'm still torn here on this. Oh, it's only 400. Oh wow, that's really good, Uzi. That is really, really good. I'm really torn on this because part of me thinks that whenever we get this kind of volatility and the VIX spikes this quickly and everything, that it's something that basically lasts for like a month. The 30s step in and resolve the issue, and everything's hunky-dory, and before the end of the year we're all the way back up at the highs again or something like that, right? But the things that are changing, the place that we are seeing the problem are kind of like, one, how do you fix that? And two, are like once in a lifetime things. We're seeing stuff blow up that, you know, all of the kind of doomsayers and so forth have been warning us about for 50 years. This kind of thing about like the yen carry trade reversing and this kind of like overall globalist trends reversing, and what it will do because we have so much, the Western world has so much debt, and what happens when that debt bubble bursts and everything, and it's like the end of civilization sort of stuff. And these are things that people have been talking about our whole lives, and that we've always just kind of sneered at, and now I'm seeing, you know, maybe it's not going to happen, but like this is like the best moment for those guys so far, you know? So I'm like, you want to learn trading yen, you're from India, well, you come to the right spot. You're probably at the wrong time though, because this is a very dangerous market to get involved in. I need to recenter here. Okay, man. I don't know what to think about what the treasuries are going to do here today, because I think the play should be go long treasuries, but they're not. They've just been selling already all day. I notice ICT is streaming. Good day to do that since our markets will obviously be trending. Yeah, but well, except for that, this is exactly where those kinds of strategies blow up, right? A lot of it is they're taking on risk. They're taking on risks that other people don't want to take, and they get paid a little premium for it. And where does that kind of a trade blow up? When something bad actually happens and all of their stops get destroyed. And if you're smart, you understand what's going on and you say, hey, now is not the time for me to be trading against the trend in the hopes that there's some mean reversion and I take this tiny little profit in comparison to what my stop is, because the chances of it hitting your stop in those situations is much, much, much higher. Like normally you would be able to say, oh, I can like, the range is going to be this. So I will take a profit that is less than that range and I'll have a stop that is more than that range. And under normal circumstances, most of the time that strategy is going to work out, especially if you're already starting to see like mean reversion in the price action, right? That trade works out most of the time. But then what happens is you get into this market and something that was like an 80-90% winner is now all of a sudden a 50% winner. And if you keep trading it, you just get diced up. It's much better in these kind of situations to, I think, be informed or follow an informed flow right now we're kind of in the mode where there's a lot going on and it's going to be really confusing, and there's going to be like huge pullbacks, and it's very, very dangerous, right? We kind of want to wait for an informed flow that's really going to run and try and, take a piece of that. So Goolsby coming in and speaking, that was maybe one of those flows that you could potentially jump on board with. But it looked like that one was pretty short-lived, and we've given up all of that. You ignoring me? No, but you didn't say anything else. Well, you said certain trading we get really money. Well, no, most day traders lose money, just so you know. But there was not really a whole lot to say about it. But back to the original subject, which was like the YouTube gurus going away. The thing that I'm thinking about here is like, okay, if the yen carry trade is really over, if it's really over, and we think that has negative implications for the tech industry as a whole, right? We think that maybe the cost of computer hardware is going to go up. The profitability of businesses like Apple in particular, but Google as well, are going to come down. Would that affect YouTube? Well, I kind of think it would, actually. Yeah, no, I think you're right. I think that, like, well, this is a tough one, but like, it does kind of seem to me like online advertising revenue would decline, all of these sorts of things. Like there would not be as much money in being a YouTube influencer, would there? And I mean, certainly in a recession, but then it might not grow back as strong. Well, I would think that online advertising would still be a pretty profitable business. I also think that content creators probably don't get paid as much as they should. Like, yeah, there's the big guys that they make millions of dollars, but like your average guy with an average audience, it's hard for them to even make a living from it. And that's, you compare that to like the broadcasting industry as a whole, right? That doesn't make any sense. They're making as much, as much content, if not more content, than they make in television, right? And they have a larger audience in many of these instances than you get on television. And they're barely making ends meet, right? So maybe it won't be like for everything. It's kind of, for me, it's kind of like, oh, so like, is this the best it gets for the YouTube channel? Maybe, but you know what? The thing that matters to me is the community. So we'll still be around. We ain't going anywhere. Okay, Octavia says that Kamala Harris is going to speak at 10 o'clock. So in 45 minutes? Okay, you know what? This reminds me of when we were having the global panic in 2008. And there was some things like that going on, right? Oh, you were joking? Oh, okay. Well, but it is something that's probably going to happen, right? It is something that's going to happen. What was it that happened in 2008 specifically? Well, there was, John McCain and Barack Obama decided to have a joint meeting to see if they could kind of come together on some sort of a unified, message to try and, stabilize the economy, and they could do their part to come in and give people confidence and everything, right? And that meeting famously blew up. Like, they couldn't agree on anything, and it was just a disaster. That was the first time, by the way, that I was really felt like, okay, I'm concerned about how this Obama guy is going to perform if he gets in office. That was the first time that I kind of realized, was like, here is an opportunity where you should have an easy play to get be able to say something, and both candidates show how they're going to work with the other side and how they would actually govern, and it was a disaster. And McCain was like, he was always the rogue that was willing to cross the aisle and do things. So you would think that McCain would be able to do something, but not Obama. Obama, we didn't know what he was going to do, and I think that meeting was very indicative of where his presidency was going to go. And then ever after that, whenever Obama did something to speak to the markets specifically, to try and, the markets, especially when it was like the first 3 months or so of his presidency, where the market just sold off every day. They would come out and they would do their press conference, and the market would go down even more as they're talking. So that's one thing that I would keep a lookout for, is when the politicians come out and start yapping about the economy, specifically to try and help the economy or overcome the crisis or whatever that's going on, the markets tend to interpret it negatively. Please tell me how I can become a pro player in trading. Well, there's a lot you got to learn, dude. Let me tell you something. If you're just looking to become rich, probably the worst place that you could be, especially right now. Especially right now. Okay, this is very, very difficult. And you're going to have to put in insane amounts of work for very little reward for years and years and years. And most people, 95% of people, never make money from it whatsoever. Okay, so if you want to become a pro trader in trading, pro player in trading, first of all, I would consign myself to, this is going to take a really long time, and I may never be successful with it, and I don't care because I enjoy it and I love it so much. And 2, you've got to learn to shut up, sit down, and pay attention and absorb what's going on right now, right? Just listen to what we're talking about. Listen to what we're saying about the global macroeconomic framework, how these trades are unwinding, how the politicians are going to react to this, how the central bankers are going to react to this, and just take it in. So what we're trying to do is we're trying to build intuition, right? People want to hear, okay, like when you're learning something, let's say you're going to learn how to cook, for instance. Okay, well, I could give you a couple of recipes that are like a pretty good basis for recipes. And I could take the approach of like, okay, here's the things that, like to have a good diet or whatever, and you learn these recipes and you can do that. Okay, like that could be one plan. And then all you got to do is memorize those recipes, and then you can cook, and then you're probably happy, right? But I could also say like, oh, here you want to become a real cook. Like maybe you want to become a 5-star chef yourself, right? Then you're gonna have to go further than that, right? Like just memorizing recipes aren't enough, because you're gonna have to be able to make up your own recipes at some point, right? And so what I might give you instead would be like some recipes that are going to like teach you basic skills. Like, you have to chop and you have to saute, and there's all of these different little things that you do, right? And as you go through those recipes, the first time that you do those skills, they're going to be kind of hard. And the first time you do those recipes, they're going to be kind of hard because you haven't done it before. It's not in your mind, but you do it. And then your brain starts to encode what you've done. Those experiences get crystallized into actual brain cells in your mind. Okay? To the point that when you approach a problem, the mind just kind of solves the problem without you even consciously doing anything. Right? And this is what we call intuition. Intuition is the ability to make decisions or know things or understand things without having to exert conscious logic in order to do it. The answer just comes to you. You don't have to consciously think about all of the calculations and so forth that are required for you to walk. You don't. you know it through intuition. It's been encoded in your brain. And these are basically machine learning networks. These are neural networks, the same way that like ChatGPT is, right? So ChatGPT is essentially mechanizing or computerizing, digitizing. That's what the words I'm looking for. ChatGPT is basically digitizing intuition. It's a digitized intuition system, right? That's the way that you got to think about it. So how do you build intuition? You are going through experiences. You've got to do things, and as you do things and you look at those situations and understand those situations, your brain will kind of encode it based on what your objectives are, right? So that's the first thing is that you have to have a really good objective, because that's how the machine learning network works. Is it says, okay, here are all of these different situations, and I want to come up with a network that accomplishes this goal, makes me money, for instance. Okay, I want to make money being able to predict the move, right? So then what it's going to do is it's going to go through and it's going to go through all of those situations and say, okay, this is what this was the answer that we needed to get to make money. So how do I reconfigure my network until I'm starting to get that answer? And I'm getting that answer through enough of those situations that it's a good neural network, and that's how it reconfigures itself, right? So that's the first thing that you got to do is you got to have a good goal. You got to understand what you're doing, okay? Now, most people think that it's just make money, but actually the goal here, if you're going to day trade, is to predict future orders specifically. That is what will help you make money, but that is the thing that we're actually trying to do is can we predict the orders effectively? Because sometimes you make money randomly, and there's enough of a reward, random reward from the making the money, that, you know, like you're going to go and you're going to take a trade and you're going to like, risk way too much money and make a ton from it. And then your mind's going to go, oh, that worked really well. I need to do that in the future. I'm going to encode that into my neural network, right? And if you were doing something stupid and degenerate, then like you're ruined. Then forever after that, you're always going to be, trying to swing for the trees. That sort of a thing, right? But if it's about predicting the future orders, that is enough to help us differentiate from when we made money from actually being able to predict what's going to happen versus we just were kind of lucky, right? So that's our goal, is to predict future orders, right? That's the first thing. Then the second thing is that we need to have good data to put into it. Because again, if I have a situation where I made a ton of money and it was just luck, that encodes, then that's bad. But another thing could be I have some sort of underlying assumption about the way that things are. And so I'm kind of encoding everything based off of that assumption. And if that assumption ends up being wrong, then all of that work that I've done is for naught. Because with the brain, like, you can only reprogram the brain so much, right? Like, you have neuroplasticity, but, it's really hard to spend your, years trading based off of price action on a 1 in 5 minute chart and do that for 10 years and then realize that it doesn't really work very well and that you're not actually making money and that the money that you thought you were making from it was actually just risk premium. And then having to completely throw that network away and, come up with a completely different framework, like the framework that we're doing right now, right? That's hard. So it's better to really base that, to have that foundation on stuff that is true. That's why we rely on empirical studies, peer-based research, or peer-reviewed research, so that some of that information, so that foundation we know is a correct foundation. And then we don't do this thing where, it's all price action. Actually, no, it's not. The market's more complicated than that, right? Now we know all of the things that do kind of affect the markets and things that will affect order flows in particular, our goal. And so we can focus on those things and build our network around those things, right? And then it's just around coming in, every day, looking at it and doing that process and building that intuition up until you can get to the point like today where you can see what's going on and you can kind of say like, well, hey, we're having a global financial crisis, so I should go long. Generally speaking, the treasuries will move up in that situation, but because you have so much money sloshing around, and especially since the money that is sloshing around is specifically centered around this carry trade that involves bonds and currencies and so forth, you're going to see like really big pullbacks. Ergo, we have to be cautious, and it's maybe just not worth trying to play on this, right? Right now, like let's think about this as a competition. Right now, it's us versus all other retail traders. Okay, let's just only focus on retail traders. Okay, I bet you by this point already, and the S&P 500 is only just about to open up in 10 seconds, by the way, so we can go and look at the damage over there in a second. Okay, amongst other day traders, I bet you that I am already top 25%. That is to say that I bet you that 75% of day traders have already taken a trade and lost money from it in this volatility. And I'm at zero. I haven't done anything. I'm at zero and I'm already ahead. Right? That to me that's intuition. So that's how you learn to trade. You want to build trader intuition, and those are some of the things. I'm going to make a video about this, but okay. Taiwan Britain says, can you give a short explanation of the yen carry trade and how it affected markets? Yeah, sure. So there is, you go back to the beginning of the trade, I talked about this as well, but I'll talk about it a second time because I know a lot of people come in like around the start of the S&P 500 open. Okay. So a carry trade is essentially this: borrow currency in a weak currency where money is cheap, and then use that money to go and buy higher yielding assets. Okay. So the Japanese yen has had low interest rates forever, like negative interest rates forever, since the 80s, essentially. Okay. So you can go to Japan and you can borrow money from the Japanese central bank, and they will literally pay you to do it because the interest rates are negative, right? Normally, you know, you're going to borrow money over here in the United States. You are paying to borrow, right? You have to give the person that is giving the money to you, right? I'm going to offer a bond. Somebody's going to buy it. They're going to give me money, right? They're going to ask for something in return. And so that is the interest rate that you get, right? But so you pay like, you know, right now 4 or 5% or whatever on interbank stuff. Okay. But in Japan, for the last like 40 years, it's been negative. Like you can borrow money and you literally, the interest rate works for you. You make money on it, right? Okay. And then what do you do with that money? So now you have all of this yen. Then what you do is you convert that yen into dollars and you buy US stocks. And US stocks tend to yield about 7% a year on an absolute basis. And so you pocket all of that difference, and you're just kind of like, so you know, you make like 1% on borrowing the money and you make 7%, and all of a sudden you're making 9%. And this has been a major factor, or it has been a major flow in the markets for the last 40, 50 years, frankly. A lot of hedge funds, this is the hedge fund's favorite trade, guys. The hedge fund's favorite trade is the carry trade. So many of these big funds, they became, you know, like they were doing pretty good. They had some pretty good things going, momentum, all of that. But like the carry trade was one of the things that really, truly made them rich. Okay. So what's happening right now? Well, the Japanese central bank came out and decided to raise interest rates 15 basis points. And that kind of destroys the trade. So now they're not making as much money or the interest rate that they're getting over in Japan isn't as good as they were getting, and the Japanese yen is appreciating relative to other currencies. And so these guys, they have all of these positions that are essentially, they're short the Japanese yen. They're short the Japanese yen, and it's going up like crazy. Man, wait, can you believe we're already back up to almost to 115 even again? Going back and forth across this range very quickly. Very dangerous range here, I think. Okay, Octavia says the KRE has been smoked. That's a good one to look at right off the bat here, I think. Oh, there it is. It's regional banking. You know what, though? It's not that bad. We need to change this to daily bars, though. Like, we're still high relative to this, but the amount of decline that it's had over the past 3 days is pretty wild. So what's happening, because this yen trade is like, they're short the yen essentially, right? It's blowing up, so they have to unwind those positions. Well, guess what? What were they doing with that position where they were short the yen and long the dollar? They were buying US equities with it. So in order for them to unwind that trade, they have to first sell their equities in the United States and then turn around and buy the yen. And then they can use that money in the yen to cover to pay back the loans that they took out, to close those trades out. That's essentially what's going on. Now, after that's all done, you pay the money all back. I don't know what happens. That's a big question. Is like, what is the next step of this? If this completely unwinds, where does the money go after that? I'm not sure. I'm a little concerned. Again, the way that this works normally is we're going to have volatility for, like, really strong volatility for a week or two. Overall, there's going to be a lot of turmoil over the month, but then eventually things chill out and the central banks step in and the governments step in and solve the problem, and things go up, and before the end of the year or before the end of the next year, we're right back up at all-time highs. That's the way that this has always worked. Like, I can't tell you how many things I've lived through like this, where there was some sort of a crisis, there was some sort of market panic of some sort, and it was all okay. So normally this would just blow over, but we're talking about something that people have been warning is going to blow up for 50 years. So I'm not so sure that this one is as simple. This could be like a really big 2008 kind of magnitude financial crisis and bear market and recession. Because I tell you what, man, it's happening at like the worst time. Because the US was already going into recession because we had the interest rates so high, and it's like dipping into the recession really, really quickly, so that we probably should have raised interest rates earlier. And then on top of that, the Japanese yen carry trade is blowing up. This is a problem. Okay. CGL, technical question. Which data do you recommend, Rhythmic or CQG? Well, so I use Rhythmic data, and there are two things that I like about Rhythmic data. One is that I get more level 2 levels. So you can see here in the treasuries, I can see like really far out. I can actually go even further than that. I can see all levels that are, out there on the exchange. Okay. Whereas on CQG, they limit you to like 10 or 15 on most instruments, although it is based on instrument. Okay. So you can see more level 2 levels. And another advantage to Rhythmic is that Rhythmic Trader Pro is written in C# and is allowed to use the .NET CLR framework, which basically allows .NET applications to share memory. And so I can get my data coming in through Rhythmic Trader Pro, and then have it forwarded to multiple applications, in this case, Jigsaw and NinjaTrader. And the only delay is the amount of time that it takes for, the next CPU cycle to come in and look at it. So it's the fastest that it possibly can for sharing the data. So if you want to have a setup like mine, then you probably want to go for Rhythmic, right? The advantage for CQG is that in CQG, you can pay $10 extra a month, I think it is, and you can get the indexes, like the tick index that tells you how many stocks are advancing or declining at that time, that sort of a thing. And there are some filters and technical analysis that you can do on those that does appear to me to have some benefit, although like the edge is kind of already arbitraged out of them, but still kind of helps. So that's kind of one of the advantages for CQG. In terms of like how good is the quality of the data, how often do you have problems, like reliability, those sorts of things, I find them to be fairly equal. They will kind of go in cycles where everybody's having issues with Rhythmic and then everybody's having issues with CQG. I've only like once or twice had like a straight up couldn't connect to the data or I had to restart, and it wasn't too bad. Whereas when I was on CQG, it had things where like I was hosed for the whole session. So I think that my CQG experiences have actually been worse, but overall I would say that they're about equal on that front. Okay. Okay, a couple of questions coming through here. What impact will this have on the services PMI? Okay, so let's come in here and check what are the things coming up this week. Man, as soon as I was like, hey, look, they're rising again, and then they got clubbed down again very quickly. Well, this decline here in particular seems to be driven by a decline in the yen. But interestingly enough, that decline... Oh, wait, here. Let's make sure that we're getting the latest data in the dollar. Okay. Yeah, the dollar is rising and the yen is falling at the moment. Okay. That's what's causing here. So I think that you're still going to get pretty big back and forths. I prefer to go long the treasuries in financial panics and everything, but so far the day has been short, which I think is kind of like, remember when we came in here and Octavius was like long and we were kind of leaning long, but so far we've been more down than up, although it's kind of been back and forth. Anyways, okay. The question was PMIs. So let's make sure I got all these filters correct here. And let's look at this week. What do we have coming up? Okay, so we do have ISM Services PMI in 15 minutes. So this one, I think that the one to keep in mind with this is that the ISM number is significant and the services number is significant too. Because we know that manufacturing has been bad for a long time, for like two years or whatever in the United States. But services was still kind of high, and services was where we were seeing more of the inflation as of late. So when you come in and you see services, when ISM services PMIs came out and it was hot, and or like it was showing prices were getting hot, then you would tend to see the treasuries like sell off super hard and stuff. Now what's happening is like all of the PMI numbers that we're getting are weak overall, and those numbers in the past week have made the market concerned about growth. So you come in and you see services PMI, I think there's a good chance the forecast is 51.1. There's a pretty good chance that it will be lower than that and will be below 50, which would signify a contraction, and that would probably make markets, again, concerned about growth. I don't know if it would be like a huge move, but I think probably you'd see a little bit of selling in the S&P 500 from it, and maybe a bit of buying in the treasuries from it. Yields coming down. Okay. What do we have later this week? 10-year bond auction, unemployment claims, 30-year. Not a whole lot other than that. And we did have PMIs last week, didn't we? But which ones were they? ISM manufacturing PMI was Thursday. Okay. So, and the Chicago PMI, of course. What about next week? Do we get inflation numbers next week? Yeah, PPI and CPI. Okay. Okay. So that's for that. What are some of the key basic market correlations that a beginner should be aware of? Well, so the way that I trade, I am focusing on a specific instrument. And so you're going to want to look at the markets that are most correlated with your instrument. So let's just say, for instance, well, I do treasuries, okay? But let's put treasuries aside for a second and do equities first. So if I'm trading the ES, first thing that I'm going to be looking at is the NASDAQ and the Dow Jones Industrial Average and the Russell. Especially the Russell right now, because Russell is like small caps, right? Okay. So you're going to be looking at correlations to very, very correlated instruments. Like these are all things that like you can do arbitrage off of, right? But there are spreads, there are changes in the spreads. I have an indicator called spread indicator that is part of my paid indicator suite. There are some spreads. I actually have a free spread, but the paid spread does things like it deals with interbar data better. It auto rolls over, things like that. Okay. So I can see right here, for instance, this is spread between 10 and 30 year, or actually we're talking about equities, so we should come to this one, right? This one is showing me what is the spread between the NASDAQ and the ES. So the more this is going up, the more the NASDAQ is outperforming, and the more this is going down, the more the NASDAQ is underperforming. And you can see this morning that the NASDAQ has been getting hammered pretty hard, right? So that's one set of correlations. You're also going to see almost everything is correlated with the dollar. So especially in this situation, seeing what those correlations are is going to be interesting. So now, these are correlations that change based on the situation, based on what's happening macroeconomic framework, what's happening with interest rates, and all of these other things that can kind of go around and change. And so part of what we're doing is we're looking at, okay, this is going up, this is going down, and what does that say about what is actually happening right now? Does this make sense? And then we can kind of use that to suss out like what is actually going on, what is actually driving the flows right now, right? So equities, what else would I look at? One thing that I think would be useful to look at if I was looking at equities aside from the dollar would be oil, because oil has an impact on equities as well. If oil is getting really expensive, it can really hurt stocks, right? So that's one that I think is worth keeping an eye on. The VIX, the volatility of the equity indexes themselves is also very, very strong. So I would focus very, very heavily on the VIX and gamma levels and all of those sorts of things, okay? So now in moving back over to the treasuries is where you get some of these interesting correlations that can kind of flip around on their heads. It gets super, super interesting and can be very valuable. So the first thing that I'm always looking at in the treasury is the yield curve itself. That's why I have a DOM up for all of the treasuries right now. You can see right now, this move, the 5-year has moved down more than the 10 and the 30 year. So the direction is down. Down is flat, right? If it was the opposite, if it was up, that's steep. We have been steepening throughout this move overall, but this, like over the past week, but this specific move has been a flattener. When we go into a recession, yield curve tends, like steepening is like what happens as the recession is occurring. Okay, so something to keep in mind. Then you've got the correlations between the treasuries and the Japanese yen. So because there's this huge carry trade where people are borrowing money in yen and then they're using it to come over here and buy things, like a pure application of the carry trade would be borrow money in yen and then invest it in US bonds and pocket the difference in yield between those two instead of stocks, right? So because of that, the yen, Japan, people in Japan essentially are like the biggest source of demand for treasuries. And that's why there's a strong correlation between the treasuries and the Japanese yen. So if you look at 6J, that's this thing over here. Okay, strong positive correlation between 6J and the absolute level of treasuries. So I know that there's this whole thing like if you were looking at USD JPY, then it's the opposite. We're looking at JPY USD. This is basically, okay, how many yen can you get for a dollar, essentially? So it's positively correlated. So the yen is selling off a little bit here, and thus the treasuries are moving down. Okay, but sometimes that flips. Sometimes they go in opposite directions. And what does that mean? Sometimes the dollar and the treasuries are correlated, and sometimes they're not. And that could depend on, is it because we anticipate that the Federal Reserve is going to have a looser monetary policy in the future? Looser monetary policy tends to cause treasuries to buy. So you might see the dollar get weaker and the treasuries get stronger in some cases, versus normally they would, dollar gets stronger, treasuries get stronger. Right now, we are getting the opposite correlation. The yen, because we're following the yen. The yen is going down, the treasuries are going down, and the dollar is getting stronger. So, I'm not sure what's causing this flow down. But that's part of the puzzle. This may just be like pullback sort of stuff. Like we were up way too high in the overnight and they're giving some of it back, or they're taking profits or something. I don't know. I don't know if I really want to be involved in it. I think that now is a really good time to learn, research, keep an eye on it. I don't think that I have a really strong edge in this. This is going to be really volatile. I want to wait for a situation where I really think I have an informational edge over the rest of the market, okay? Let's see here. CGL. With CQG, I get 700 milliseconds latency to late the London. Well, that's too much. But where do you live? Well, that's kind of weird. I mean, typically you want your latency under 100 milliseconds at least. But I don't know if it matters that much. Depends on how you're going to trade. But that might be something that you will just have to factor into how you trade. Long the treasury is a good move when interest rates are high. After the rates cuts, you can sell at a premium before maturity. Well, Uzi is probably making some good money off of being so into TLT. The only question now is, do the treasuries completely unwind and go back to those levels that they were like during COVID and 2008 and all of that sort of a thing? Or have they already reached the peak of this cycle, right? You got 10 ticks on the low IB rug? Well, okay. It's a pretty strong flow. There was about, actually, I take that back. It was about 10,000 contracts. Man, this is just way too illiquid of a market. I still just don't want to touch it. It's when the treasuries, okay, so two things. One, you notice here the offers less than 1,000. So when we're seeing that, this is very dangerous to trade. Okay, just know that you take a trade, you could easily make or lose 50, basis points essentially. So be careful with that. And not 50 basis points, 5 basis points. Two, it seems like the bids are stronger. So it does look like that this range we've gone back and forth across, and so there's not as much liquidity, but there is more liquidity when we get outside of the range. So that could be something that could cause a little bit of bouncing. Okay. Man, so much. Okay, so there's still some reading. We finished this zero hedge story over here. Oh my gosh, there's so well. This is like their whole morning market synopsis, so I'm not going to actually finish reading that. Well, let's come over here and check their stories again. You pull up the cost. Oh yeah, sure. That is actually bouncing off the cost basis. To the tick. High volatility. And it goes to our levels like almost to the tick. Seems like something that could be valuable, yeah. And that's actually, you know, I never thought about this, but kind of seems to me like this can be more useful in times of volatility, which is the opposite of most other things, right? Do you see this over here? So I have an indicator on the S&P 500 that it basically is looking for skipped prices. Basically, you know, there's a price where like nothing traded, just all of the orders pulled and they went right through it. And like in normal circumstances, you almost never see these. It's called pulled prices, by the way, is the indicator. It's part of my indicator suite at speculators.com. Now you're getting them all over the place. And you're getting them all over the place. What is this? So remember, guys, the economy doesn't matter. What really matters is if people are saying that Kamala is not black or not. I don't know if I really want to get into that one right now at the moment. Let's come back. UK riots still going. It's another thing going on that we haven't even talked about. I don't know if there's a whole lot that I can see, but I'm not in Europe and I don't understand what's going on over there as well. Okay, but no other new news stories over there on Zero Hedge. So let's take this opportunity to go and look at our watch list on Koifin and see how much the damage is on the stocks that I've been monitoring. Okay. Well, Berkshire Hathaway down. Oh man, my portfolio is probably going to be down almost 5% today. Everything's down. Actually, rare earth minerals. It's not that bad. But that's probably they've been hammered already, huh? Let's see. Interesting. But still not back to the 20 cents spot. Okay. Meme stocks. Wow. MicroStrategy down 14%. Coinbase. So crypto hit particularly hard. This is a big one. This is like one of my pet peeves because the crypto industry, they lie to you. They say like this is a strategic reserve asset sort of thing. Everybody's going to want this on their balance sheet, etc. So no, it's not. It is a risk asset. It trades like a risk asset. And in situations like these, it tends to sell. That's what happened during COVID too. Spammers are calling me. Oh, which by the way reminds me to turn on this other machine. But these other ones, DraftKings, ARK, they're all getting hammered. Do you think, I tell you what, ARK, I really think that lady, Kathy Wood, is just absolutely off her rocker. And I'm kind of starting to wonder now if like after all of this is said and done, if she'll be out of business. Okay, the Magnificent Seven. Well, we already kind of talked about those, but they are all down. Nvidia down 7.53% at the moment. Yeah, my rare earths are down. Man, everything is down. New nuclear is down. And Energy Fuels Incorporated in particular, which is a uranium stock, down in particular Consumer stocks, not as bad, but still pretty bad. Crocs is getting hit the hardest. So Crocs has kind of been like best in class in some respects. Like Crocs has been done well lately. Let's pull them up here. Crocs. Okay, like they've done quite well since 2020. So it looks to me like leaders are being sold, right? This is like a deleveraging kind of move where they have to sell a little bit of everything, and so the stocks that were the most owned, the most likes, get hit the hardest. Tech. Well, CrowdStrike is actually up today. Yeah, I should pull that one up because, you know, I haven't looked at that since I was on vacation. Oh, man. But it's been mostly down. That's funny. You know what? The crazy thing, though, is that they're still only getting to, like, last November levels in CrowdStrike. That just shows you how much that thing was up. Good grief. What a disaster, though. CrowdStrike. Supermicro getting hammered, but these guys not as bad as the ooh, okay, so there's the PMI. Whew. Okay, it was higher than forecast. 51.4 versus an expected 51. Okay, so that's why they're selling. Oh. I think I can actually, I'm going to take I'm on sim here. I'm going to take a risk here. I think because of the way this is going, I should practice. I should only take one. I'll take one, and if I get it to come up a little bit, maybe I can add a second one. But I don't think I'm going to add to it as it's going against me. Because I'm getting, we're at like a key level here that I should expect to see a little bit of a bounce. We'll see. I don't know if that number matters as much as the other things that are going on. Like if it had been a bad number, I think that treasures would be like taken off, but with it being just a little bit above and mostly in line, I would say. I'd expect it to sell and kind of only be a gentle sell. Well, okay, I think we're already past my stop, right? Which is actually going to be right here. Was that actually 16 ticks? Oh, it was. That was such a terrible trade, guys. Well, that's why I did it on sim, right? I knew it was dangerous. How far can this go? 13? Let's try it again. Is it even worth doing all the work to become a pro trader, even though there are research studies that conclude? Well, for most people, no. Yeah, I'd say that for most people, it really isn't worth trading. Like seriously, it's a lot of work. Like I really feel like a really large contingent of people get into it because you know, they want to escape the 9-to-5 prison. They don't really like their career, or they don't really have a career to begin with, even more commonly. And so they view day trading as anybody can get into this and I can potentially make, you know, millions of dollars from it. And, you know, those people, it's not worth it because you don't make any money from it. And worse, you're like investing all of your time into something. You could be investing it into like starting your own business, so much more likely to bring you to game-changing wealth than day trading is, right? Day trading is really for those of us that have already been successful in other things in life and have a decent amount of capital to be able to take big risks with, and just love it. Just love it. So trading can be a really good wealth enhancer, but it's not a very good wealth builder. This is the problem, right? But if it's something that really interests you, then I think it can be a really valuable thing. And even if you don't make money, I feel like that, like most of the time from my day trading in scalping the futures, is overall net, at least through the past history, has been overall net loser. I think I made money last year. I'm down this year, for instance. Okay. But I'm talking like small amounts, like a few $100s, right? Like a bad year for me is I lost $500, right? But on the other hand, I understood the housing market to know when to buy a house and to deal with interest rates best and everything like that. That's worth hundreds of thousands of dollars. It's worth hundreds of thousands of dollars, right? So I know enough about the market, and it's helped me in making other decisions in my life and so many things like that it really has paid dividends for me, right? But you're talking about a person that I do site reliability engineering, that pays really, really well, even in as the software industry as a whole. I already own a home. Like, I'm doing pretty good, right? I'm doing pretty good. So for someone like me, coming in and the opportunities and so forth that you can get from trading and investing can be really valuable. Whereas I think most people, you're just starting out. It's really not worth it for most people. But I have a whole video about this, about, is trading for you or not? You can go and watch, where I kind of go into that a little bit more about like, what are the qualities and things that you really need to have for this to really be like a good opportunity for you. Andre, you might expect being profitable after 4 to 5 years, and if you're looking strictly at day trading, there might be a change never being profitable, just like you would go to a casino. Yeah. Well, and part of the another thing that we do need to understand is that the trading game has changed in the last 10 to 20 years. In the 80s, when we were growing up and we were all kind of primed to do this sort of stuff, day trading was a profitable thing. You could go and you could be a local, you could be a pit trader, and those guys did make money, right? But after 2008, the robots really took the market over and really took those opportunities away. And so it's harder than ever to be a successful retail day trader. I'm really trying to rack my brain this morning because I'm trying to think about, okay, like the place to play over the last 20, 30 years has been technology and software development. And does a collapse of the carry trade hurt tech? I think it does. Does that make some other sector of the economy a better place to play? Like is the thing to do now to become a welder, perhaps? I can think maybe welding, because I'm trying to think of like, okay, so what would be the opposite of tech? Manufacturing. Well, I don't know. Manufacturing ain't doing so hot right now. I don't know if manufacturing actually will do well in a carry trade, but it's on the list. I think it should be on the list. So then you would want to think about not high skill, but skilled trades. Welding is probably one of your best money makers over there. You can make almost as much money welding as you can from software development, and it's probably less education and investment to get there. Although you do need education and investment to do it in welding, because there's all sorts of qualifications and stuff. Technology, but what about healthcare? Healthcare, that's a good call, actually. On here though, I don't have a whole lot of healthcare stocks on here. I think we would want to add like Tyson Foods is up, by the way. So defensives are doing well, relatively speaking. Fixed 78%. Oh, I don't have any medical stocks. Well, let's add over here equities, United Healthcare. Is that it? Sure, I'll just add that. I don't know if that's the one. That's a 0. I don't think that's no. Kind of sucks that I took the loss on the original one, but then this follow-up trade seems to be working pretty okay. Oh, they're shying away from my 16.5 area. Wouldn't United Healthcare be the... UNH. There we go. Okay, they're down 2%. So better than many others, at least. But I kind of like the play in healthcare because there's going to be a lot of healthcare needs as boomers retire in the next 10 years, right? So I think that's a pretty good play. They say the robots took the opportunity and kind of nick ticks taking profit for a tick. Well, a lot of it comes down to like being at the front of the queue, right? And so they are just, you know, taking a tick at a time or whatever. But I'm talking about competing against them, right? That's the place where a lot of retail people that were day trading back in the 80s, that's where they were making their money, was as scalpers, as liquidity providers. And the robots have basically made it to where it's not very feasible for a retail trader to be a liquidity provider anymore. Because you're not fast enough. The robots beat you to all the best orders. It used to be this thing in the pits where, like, you know, you want to be at the front of the pit, and if you couldn't get a good spot in the pit, it was hard to do well. Going back over to this. What was it? UNH? I'm looking for competitors. Performance compared to Humana, CVS, Cigna. And when we go to these, what do they? So those would be healthcare insurance providers, but what about absolute healthcare providers? I suppose there's the company I used to work for. were they? WTW, right? Oh, down 2.62. Not terrible. Yeah, I can do some more research about that. So I'm definitely going to be paying attention to like which sectors are doing the best today. I think that it's it's almost certainly going to be defensive with everything else down, but like which ones are down the least, right? It's almost there. Come on, almost there. Man, S&P 500 is so messy right now. I think if I had taken that as a live trade, I probably would have like lost 10 ticks immediately, bailed on it, and then not taken any more trades today. So I'm glad that I decided to, dip my toes in the water with sim orders first. I haven't pulled up a chart of the Nikkei specifically, but we were told that it is down 14%. Yeah, all of the headlines are. You're right. Like, do you get this same kind of feeling, Uzi? That's like, well, normally this kind of all blows over, except for the things that I'm hearing are the things that like I only hear when we're having like a real recession type market crash. And like, frankly, if we're gonna see a shift in a dynamic as strong as the carry trade, for instance, yeah, like that's gonna have really long-reaching implications that I can't even begin to fathom. So it really does have me like, I'm not so sure this is a dip I want to buy, you know? Like, normally I'm like, well, okay, I want to buy this at some point, but I don't know if now is the time. Let's just kind of let it, bottom out and, everybody kind of chill out and then we can go and buy it. But this is kind of looking like this is going to be more than a dip, right? I'm kind of thinking like, I'm not sure if recession is like the most likely scenario here. I think that I would still be at like 45% chance of recession today, but maybe that changes really quickly. I guess a key point here will be how do they deal with this, right? Because it could be, like, in all seriousness, it could be we have a few days of this carry trade unwinding, and then we kind of look at the damage and like if it doesn't lead, I guess you need something else to break now, right? This is a point of like things got bad. And people think, okay, maybe now I can buy the dip, and it either does get better from here and it all blows over, or another shoe drops. So probably what we should be waiting for right now is the next shoe to drop. Then it really turns into, okay, what do the central banks do? I think the central banks will respond in some form. But we'll see how aggressively. There's also this scenario, though, where it like, okay, it sold off and all of that sort of stuff, and then it kind of chills out. But then instead of it going right back up to the highs, it just kind of turns into a slow burn from there, right? Because that's kind of what happened after 2008. Was like there was the initial crash, but then then like the whole rest of that year there was a recovery, and then with Obama coming back into office and everything, then there was like another leg. It was kind of like a double dip recession in some respects, and then that was when it really got bad. And that was like, you know, it wasn't like a huge move down every day, but it was like every day 1% we'd lose or something. Sure, you know, and it just kind of turned into just go short. What is there some kind of metric we can look at to know when the carry trade may start to be over? Well, I think that the thing that we would want to be looking at is the Japanese yen versus the dollar. But what level we would be looking for, I don't know. So I'm definitely on the lookout for some research that might tell us. Actually, there is a story I've been putting off on reading. It is a premium article, so I don't think I'm supposed to read it. So I will just maybe read it to myself afterwards. But there's this one, the 20 trillion carry trade has finally blown up. And I'm interested to see if in here they give any kind of numbers like that. This is a Deutsche Bank note. I don't know. I was just reading the conclusion there and it didn't have what I was looking for, so I don't know if that article is going to have the information that I want. Well, so here's another question, because one of the things that I've noticed about this move, especially last Friday, was that regular people were seeing it. Like it was picking up a lot of interest on social media and so forth. So if I come over to Reddit, what are they talking about? Elon Musk says civil war is inevitable in the UK. Okay, you say so. I think a civil war in any of these Western countries highly unlikely, but is there going to be some political upheaval over there in the UK that is maybe to the advantage of Nigel Farage and co? Yeah, probably, but not a civil war. Wow, Anne Frank painted red by protesters. That's not okay. I'm not seeing anything about it on my Reddit front page yet. Here's for president. Everything's red. Okay, so one thing that I have been seeing is some people saying that, oh, well, the reason that the market is so panicked and everything is because they chose Kamala Harris as like the nominee for sure now, and she's up on the polls now and all of these sorts of things. Nah, I don't think that that's a factor at all. First of all, we knew 2 weeks ago. Remember, before I left, I said people have until Thursday, and then if nobody else like says that they're entering in the race and gets enough delegates before Thursday, then we're just going to do the roll call online. And that's exactly what happened. So we've known for like 2 weeks that it was going to be Kamala Harris, and that there wasn't much of a chance for them to undo it. There just wasn't anybody willing to dip their feet in for whatever reason. I think that it really had to do with like the jobs numbers are looking bad, right? We bounce hard off of Friday's close, should backfill for the rest of the day. Is Friday's close in the treasuries, or where are we? Which market are you talking about there? Yeah, let's come here because it can't be ES because we're like way down from there. But yes, the close. Oh, it was 03 half. Okay. Sure. I don't know if they're going to get to my 16 half level. Okay, but so anyways, I don't think that the Kamala Harris trade is a significant factor right now. It could be something that may have flows over the long haul. But I am still of the opinion that Kamala Harris does not stand much of a chance of winning the election. You're going to see like a bounce right now. I tell you what, the astroturfing on the internet, super, super strong. On Reddit in particular, they're just pushing. I saw this story the other day that they were paying some $20,000 or something worth money to get TikTok influencers to the Democrat convention and stuff like that. They don't do that on the Republican side. Like they aren't paying people on social media to be Republican social media influencers, but they do on the Democrat side. The astroturfing, man. It's coordinated effort to make something appear that it's more popular than it really is, and it's happening right now with Kamala Harris. The Democrat Party is pushing it really hard. And so with the convention, probably you see a little bit of a bounce, and then that kind of subsides, and then you get Labor Day in a month, right? And that's going to be your first like kind of baseline where polls start to matter, and then from there, I expect that you'll start to see Kamala decline in the polls. If they don't, then I might have to rethink some things, right? But the way that I see it right now, Kamala Harris has some pretty insane negatives that I think will play poorly, particularly in battleground states like Pennsylvania, that will make it very difficult for her to win. The only real change I've seen in the presidential race since I was gone was this whole thing about, is Kamala Harris actually black or not? It's not something that I think was really played well for Donald Trump, but I could be wrong. One of the things is like if you have a candidate whose biggest strength is the demographics that they come from and the demographics that are likely to vote for them because of that, then I think it shouldn't be surprising that their opponents are going to go after her demographic credentials, right? Like if that's her biggest strength, then how do you pull them down, decrease that strength? She's not really black. You can get into all of these details about her history. That it's actually a really complicated thing. I mean, it seems like she is black, but she's like a quarter black. And is she culturally black? I don't really feel like she is. She's more Indian than anything. But I don't care about those sorts of things. Some people might. Will it affect their vote? I don't know. I don't think it will affect their vote as much as Kamala basically being like pretty much a communist. So I think it's going to be really hard for them to win Pennsylvania with that. And if they can't win Pennsylvania, I don't think they're going to win the election. So that's where that's probably at. So first of all, I think that Donald Trump probably still wins. You are seeing some prediction markets start to price Kamala higher than Trump, but I wouldn't pay attention to those at all because the prediction markets are so illiquid right now that, one guy could push it to equal, right? I don't think it's really a very good predictive indication right now. Now, the other thing, I would go back to the other thing on the political spectrum, which is the UK plunging into race wars. It does seem to me that these riots over there are getting really bad, and like that a significant thing is happening in the UK. Usually the way that these sorts of things play out is the state does come in, gets really hard, and like quells the unrest in some form, and it blows over. But the political implications in the longer run are what really matters. Does this result in a more conservative governorship in the UK? Maybe. The issue in the UK is that the Conservative Party itself has not been helping, right? They kind of do what a lot of Republicans did in the United States for a long time until that contingent of the party took over, which was like they'll play to it. They'll say, yeah, we need to do stuff about immigration and everything, but then they don't actually do anything, right? And that's kind of been what the conservatives in the UK have been doing, is they're still allowing a lot of immigration. And they've been losing support because of that. And the Reform Party or whatever that Nigel Farage has been going has been doing well, but not enough to really be a factor. But I'm kind of wondering if this is enough to make that shift happen to where, that becomes more popular than the Conservative Party and it shifts in that direction. It could go that way. Also, it's not the UK, isn't it in Ireland specifically? So that's another interesting factor behind it all. Man, I tell you what, if you're just looking to make like 4 ticks in the ZN, you can do it. I probably should have been playing the multiple contracts here a couple of times. But I came just short of my profit taking zone up in here. Her great grandfather's last name was oh, dude. Kamala Harris's history is a interesting thing. I mean, it's mixed race, like all the way down the board on her father's side. So I think somebody did an analysis and they said that she's 50% South Asian, 33% black, and then the rest is white. For our purposes, the thing that we would be most interested in terms of like understanding Kamala Harris's background would be, okay, so if she does win, what sort of things is she likely to do? How would she behave? Are there some things about her background that might give us some insight into how she would perform as president? On that front, I think that I would take the position that she's really not black, which is to say that the household that she was raised in was primarily Indian. Like if you go and you look at the pictures, like her mom's Indian, they're all wearing Indian clothes. So her culture is going to be much more Indian, and she's going to behave more Indian than black, in my opinion. And another thing to note is that her father was basically like a communist scholar sort of a thing. Okay, so she might not be as far left as her dad was, but she seems to be pretty... It certainly shaped her. And interestingly enough, her father has spoken out against her on a number of occasions about certain things. So, like, that's kind of weird, too. That just kind of shows you what he's like, right? He seems pretty radical to me. So I would expect Kamala Harris, if she was in power, to do radical things, try and implement pretty far left policy through executive action. This is what I would expect Kamala Harris to do if she was put in office. And I kind of wonder, it's because under the Biden presidency, we have seen pretty far left activist executive actions, particularly as it relates to college debt forgiveness, for instance. And I wonder how much of a factor Kamala Harris has been playing in that. I do not like that stack of offers that's been put on me. It's like they know where my position is at and they're trying to squeeze me out. I think since they're coming through here, I'm gonna take a little tiny runner. I'm gonna try here. See. This could just blow up in my face and be like, ah, forget it. I mean, it is trend down, so I am trading against the trend. What's this I'm seeing on Discord? National Economic Advisor resigns? Brian Deese, top economic advisor to Biden, to resign. When was this? February 2nd, 2023. That was a long time ago. January 17th, June 20th. I don't see anything from the past day, though. Let's go tools. Anytime past 24 hours. Senior economic aide Gene Sperling is leaving the White House to work on the Harris campaign. You mean this? I don't know if that's a big deal, but whatever. If you haven't seen today, apparently multiple brokers are down today. I've seen a lot of stockbrokers having issues, yes. I like the music. It is Stream Beats by Harris Eller. You can find it on all streaming platforms, YouTube, Spotify, etc. or streambeats.com. Part of me kind of feels like giving up on this sim trade, but no reason I can't just let it ride. Overall trend doesn't look too good for me though, does it? Let's see here. Did I have... Oh, yeah. I was browsing over here. I think I can close this. All right, well, I'm gonna flatten and wait. Actually, got 20 minutes left, so I don't know if that's enough time, but it looks like getting out of that break even is fine. Shame I got 17 ticks out of it, so I should have taken profits, but I had my profit up at that other cost basis level and it didn't quite get there, so. Yeah, see, I did expect a bounce. Like what I was doing is I was looking at this and I was like, okay, I don't think that it should be able to go through that for too long. So I expected them to do this, but it didn't. It went way too far on this one and way too far on this one. These were good though. I guess overall, though, my reading of how the market would react to that news was wrong, I think, because I expected, oh, okay, services PMI was actually in line or okay. So that probably doesn't change things too much. I think that the market is probably still going to be looking for like emergency rate cuts and all of this sort of stuff and the panic from Japan and everything. But they took a real haircut in rates because of it. So I don't know. I was wrong on that one, I think. I think overall I was wrong on the thing, on the larger play. You can see the results there. What was this in? How do I use that spread chart like this one? Well, the main thing I'm looking for with respect to spreads is just, is there a trend in the spread in which direction it is? So today, it is flat. I mean, they are giving up essentially some of the gains that they got from the steepener over the past week. It's flat. So once I know which direction the spread is going, then I come back over here and I can use that to kind of interpret what's going on. So if we're flat, that means that they're going to sell the 5 and they're going to buy the 30, right? So I'm coming in here and I see a really strong iceberg on the bid in the 30 year. You know, they're really trading into that and they're just buying and buying and buying. Should I read that as like support? This is going to push us up, etc., etc. No, because it's because of the spread. So I have to discount it. Now, if I was seeing that in the 5 year, or I was seeing it across the board, that would be something else, because that wouldn't just be the spread trade. That'd be unusual, actually. I'm not sure I've ever seen that. Right. But essentially, you have to use the spread to interpret the order flow across the 3 and kind of adjust and discount what you're seeing in the order flow based on the spreads. Otherwise, it will give you false signals, essentially. Secret says, I learned a lot from your Dom trading playlist. I didn't know about it. I was just looking at the charts. Well, that's great. Thank you. I spent so much time on those videos. I'm very proud of them. And I really like it when people find it useful, because that's the whole thing. That's the whole thing we're trying to change, is that the average retail trader's approach to the market is oversimplistic and wrong. Back down to the lows, in fact. Well, I'm glad that I dumped that, but not that it matters as a sim order, but you know, I need to take the sim orders more seriously. I'm glad that I dumped that. What are the chances that they push this further? It doesn't seem like they actually want to. Definitely saw the selling in the 10 and the 5. Some more Ninja Script videos. So, you know, like the thing with the Ninja Script videos, so I do have a playlist for that, by the way. But there's only like 3 or 4 videos in it. There's also a number of videos that are like backtesting specific ideas. I feel that one of the best ways to... So again, going back to this thing that a lot of it is about intuition, is like, if you want to become a good programmer, you got to go in and just tackle a bunch of different programming tasks. And that's how you learn. And that's kind of how you build this mental model of how to trade and stuff. And so I made those videos, partly to like, you know, debunk a couple of like popular strategies that were going around, but also to give people examples of like, how do you program these sorts of things, right? Those videos never really did very well, so that's kind of why I stopped making those ones. And then there was some other things that I could make for Ninja Script Trader. For instance, something that gets requested a lot is to make a video about like drawing objects and that sort of funky stuff. But the problem that you get into with those videos is that most people are just not at the level where they can do that sort of a stuff. And so what you're really doing is it's like giving a toddler a firecracker, right? And they just come back to you like, you know, not able to figure it out. It's kind of like if you're at the level to be able to program those sorts of things, you figure it out on your own anyways, you know? So if I was to be making more content that was kind of aimed at beginning programmers, I think that it would need to be more beginning programmer content, which I don't know. I don't know if and I just don't have ideas about how I would do that. My videos are kind of more like, you know a little bit about programming, but you've never done Ninja Trader. You know, how do I get you up and running and coding things as quickly as possible? That's why the videos that I made are about like, what are the key functions and how you use data structures in there to do stuff, basically. I need to open this. I started my laptop and then I forgot about it, and so I didn't open up the RDP that would keep it open. I'm finding the transition from MetaTrader 5 to Ninja Script quite challenging, but it's necessary because the order flow is entirely... Yeah. Oh, you commented the other day, didn't you? So I saw some, or maybe you sent me a message, because I remember somebody saying something like that. Oh, it was it was an email, and I haven't gotten to the emails, but somebody sent me an email about that. Programming in order flow stuff in Ninja Script is amazing, because most of the methods and so forth are event based. So basically, every time that there is volume, there is a function that gets called. Oh, it was email. So now I don't have to answer email. No, I'll still answer it, but you get the same answer you're getting now. It's all event based. So I can come in and I can say, okay, every time that there's a new order, increment this variable. And then I have the total numbers of buys or sells or whatever, right? Or the way the cumulative delta works is, okay, every time that there's volume, compare the price of that volume went off at to what the best bid, best offer was. And then if it was at the bid, then I know that it was a sell. And if it was at the offer, then I know that it was a buy. and I increment my buy and my sells correspondingly, and then, buys minus sells is my cumulative delta. That's how it works. So making those kinds of indicators are extremely easy. And then you can get into things like, okay, like for instance, volume profile stuff, right? Okay, every time that there's an order, look at the price that that order came in at and increment a volume counter in a dictionary at that price. And then that dictionary is a collection of a volume profile. And then all you have to do is draw the volume profile or whatever it is that you can, or whatever kind of analysis you can do with it, right? So those things are really easy. And one of my videos, the one about data structures, is kind of going into that, how you do that stuff. So it's a very, very easy to use. It might seem like a difficult transition, but that's probably because you're trying to like, okay, here's what I did in MetaTrader 5. How do I do that in NinjaTrader? And so there's going to be lots of little bits and pieces here and there that like you're going to, oh, I did this. How do I do this? It doesn't exactly match up. I'm searching, but I can't find the thing that I want. Probably a better approach would be just go from scratch on NinjaTrader. Like you watch those 3 videos and you write indicators like that. Make sure you understand how the what stuff goes in the on state change and what stuff goes in the on bar close, right? And kind of, because there's a couple of little catches and things that people tend to forget and everything. And once you've figured all of those out, then you can go back and look at your indicators in MetaTrader. And instead of like trying to look at each line of code in MetaTrader and convert it over into NinjaTrader, you're just going to know, oh, I'm going to need this. And then the only thing that's really going to matter is like the actual calculation itself that will go in the on-bar update method. And then you convert that over. And you'll be over a lot faster. Well, we did recover here, but I don't think, because where was my position from? It was from 07. Oh, okay. So maybe I would be in the money now. I don't know if it would make too much of a difference, but the Prime Minister of Bangladesh has resigned and fled the country. What? Oh, geez. Have you used Quant Tower? Yes. I didn't get too deep into programming with Quant Tower, but there are some brokers that offer Quant Tower for free, and it looks like it's a suitable platform. So, if you're looking for a free platform, I think Quant Tower is one of your better options. Like Optimus Futures has Optimus Flow, which is basically Quant Tower with a couple of custom changes to it. As of late, I've gotten more into the Python side of things. It's kind of weird because I always knew that like quants use a lot of Python and that there's a lot of Python and all that. But the Python ecosystem for backtrading is actually really fractured and confusing at the moment. But I was able to get, we should show that. We should do that. It turns out somebody had converted it over into the latest versions of things, and I just didn't know. And so let's see here. What was it? CD futures trend model, and then I'm going to go. Well, it's in a Jupyter notebook, so I'm going to Jupyter notebook. I hate the way they spell it. Oh, I need to use Conda activate. Zip 310. There we go. Now I can use Jupyter Notebook. Conda is a way to manage your Python dependencies and so forth. So I have to go into environment where I have all of those things installed first. Okay, so then I can go into my trend model notebook. Here's all of the code. And then down at the very bottom, it should show, okay, so there are some, I don't know if those are really problems per se, but positions are, you know, it gets delisted and it liquidates the positions. So there's kind of some historical issues there, but like not a huge deal. And then here's the back test. So it says it returns 3.466% overall. And here's the chart. So the first thing I think I got to do is figure out how to make this little window bigger so you can see the charts a little bit better. But you can see here's the return versus the S&P 500. So here was this period where momentum kind of underperformed the S&P 500, and then COVID came and it like really outperformed. But then it looks like since 2022 that the S&P has really outperformed momentum. I wonder if the momentum is going to come down if the S&P 500 is going to come down and momentum will come back up and they'll kind of meet up again. And then we'll see where it goes from there. But this is a really simple trend model. Also, they've got really good, rolling portfolio beta, Sharpe ratio, drawdown periods, all sorts of statistics like this. So I can work from this. I think the first thing I need to do is make this a little bit bigger and maybe try adding my own few conditions to its entries and so forth. And then after that, I think we're going to go and do like some better statistics, you know, like a probability adjusted Sharpe ratio and things like that. So, but I finally got it to work. So now there's all sorts of fun work and we can do that on stream. I'll probably be spending a lot more time on that, especially when it's quiet. But, you know, I kind of thought that we would continue to be quiet throughout the summer. I did not expect this spike in volatility, really. So it might be a while. It might be a while before we have the freedom to do that sort of a thing. Well, you know, it's about time that I should probably just close things down. So, I think we had a pretty good first stream coming back here. A couple of new people too, so I appreciate it. Oh yeah, it was actually a little bit, for a summer at least, a little bit more popular of a stream. But crazy stuff going on. So, it does still kind of look to me like the treasuries are bouncing. My cost basis is now at 16, so that's kind of a spot I want to look at. If we're at 16 and we go above 16 and it doesn't bounce back down, that might mean that there's something bigger going on. I'm not seeing a big change in the flows yet, though. So it's coming back. Last thing I'll show you here, you know, there was overall decline for, I'm not entirely sure why, but maybe it was front running the snooze event. And now it's flat. So we'll see where they go from here. And I think, you know, things will get more interesting because it probably will see like central banks and so forth get involved here. So stay tuned. I'll see you tomorrow. Stay excellent, team.